financing costs, acquire and restructure industries, and strengthen operations to obtain rich profits. But in China, after a round of bull market noise and madness, PE has almost become an equity speculator. Generally, in the pre-IPO non-listed equity investment stage, it only takes 2 months to achieve over 100% net income. Therefore, as a synonym for money-making tool, like the portal websites that were established by both cats and dogs back then, both investment banking, consulting, and investment professionals rushed into this industry for a while, establishing PES to attract investors. However, the dot-com bubble has burst and closed its position. The bull market feast will also end, and a large number of low-end, concept-only Chinese PE will also be evaporated. The relevant policies have only accelerated this process. Secondly, the misaligned timing of life has caused PE to turn from bull to bear before it has fully unfolded. Funding for VC and PE in mature countries, many of them come from professional investment institutions such as pension funds and education funds, as well as mature wealthy individuals. These NDS do not require short-term returns, but focus on long-term growth. Therefore, PES funds are truly idle and can be locked in for more than 7 years. In China, however, the capital client requires PE to move in and out as fast as the secondary market, to exit in 1 or 2 years. And to have returns beyond the industry. But what else can't they ask? It is precisely this cognitive mismatch in time and space that has led most local VDS and PES to focus on investing in late-stage projects such as pre-IPO, falling into a vicious cycle of being too eager for quick success and instant benefits. Therefore, although the average size of domestic funds is still less than 1/5 of that of foreign funds, the projects covered are particularly large, not yet enough. But with the decline in the stock market since the second half of last year and the uncertainty of the exit channel, PE, the valuation of investments is rapidly decreasing. So, should companies still entrust money to PE? What is the prospect of PE investment? Actually, this requires we need to interpret it from a larger perspective, as PE is a typical representative of financial capital generated at a certain stage of economic and social development. Its fate is closely related to another major capital driving economic development, industrial capital. In essence, financial capital and industrial capital are simply intercepting different parts of the same interest chain, but they always try to nibble at each other's interest segments, forming a game on the one hand. In the view of Cummings, although small and medium-sized enterprises will ultimately rely on market mechanisms to achieve self-redemption, the government also has no reason to completely standing idly by. Not to mention that small and medium-sized enterprises are the main battlefield of innovation and the source of economic vitality. In terms of their social contribution to attracting more than 70% of the employed people in society, the unemployment problem caused by small and medium-sized enterprises falling into disasters is the biggest disaster faced by governments at all levels. Therefore, in the context of the transformation of growth mode, industrial adjustment, and industry reshuffle, correctly handling the disaster of small and medium-sized enterprises and avoiding the severe employment problems caused by it have become an insurmountable political reality in the process of national industrial policy formulation. As analyzed above, the main space for administrative power lies in, firstly, guiding the transformation and upgrading of small and medium-sized production enterprises through financial subsidies, tax reductions, and transition periods, and trying to absorb the pressure of rising factor costs within the enterprise. For example, the country has introduced or is planning to introduce 3 supportive policies for the struggling textile industry, namely reducing the temporary cotton sliding rate, increasing the export tax rebate rate, and possibly cancelling or reducing the processing trade tax deposit that increases the pressure on enterprise capital turnover. For example, the state and industry may consciously guide enterprises to transform and produce environmentally friendly plastic bags in the form of subsidies or tax incentives, ensuring the implementation effect of the plastic restriction order from the source. Secondly, following the example of foreign countries, specialized management and service institutions for small and medium-sized enterprises are established from the central to local levels, providing one-stop centralized services to avoid the calm water control and effectively implement the non-public 36 articles. The Federal Small Business Administration of the United States was designated by Congress as a permanent federal agency in 1958, providing various long-term services such as financing support, credit guarantees, and labor intermediaries. Finally, the fundamental solution lies in the transformation of government functions, ensuring that small and medium-sized enterprises enjoy true free public market treatment, while focusing on long-term institutional construction such as finance and law to ensure the institutionalization, efficiency,